everyone. This is Abhijit Chatterjee recording our weekly session for Chartsarefun. This is for the week of September 29th, recording this on October 5th. Today we'll keep it short and sweet. We want to talk about looking at moving out of the physical gold into digital gold, which we know is Bitcoin. We'll look at the chart of Bitcoin. It recently broke out to all-time new highs. And we look at the chart of gold. The gold is climbing higher highs. There is tremendous amount of interest from central banks to buy gold and diversify out of treasuries or diversify out of US currencies and so on. We look at what the gold chart is telling us from a long-term cyclical pattern. So with that, welcome to our blog site. It's chartsarefun.substack.com. This is the archive link here. Daily blogs are published around 7 a.m. Appreciate you subscribing to it with your email, and the blogs will be sent to you as soon as they get published. Our YouTube site is also Chartsarefun. We do believe that there's tremendous patterns in charts. We consider it very valuable for making trades and making your investment decisions. Our goal is to really share technical analysis. We're not investment advisors, not here to give you investment advice, but share some patterns that you could use fruitfully for your investments. So we said we're going to talk about digital gold, which is Bitcoin. And this is the daily chart of Bitcoin. We can see that from that April 7th low at 74,400, it had climbed to almost close to 49,000 towards 123,200. It did that kind of the early July timeframe. From there, we can see that it's been printing a pattern of higher highs, and in some ways, what you see here highlighted in blue is a flag pattern. So the flag pole is from 74 to 123, and then a kind of a flag pattern. It had pulled back from 123 to 111.9, then went up to 124. So many were looking at this to be an M-shaped double top, a second top when the 124 was formed at the lower high in RSI. So this was an M-shaped double top. And if that had panned out, the downside from that break below 111.9 would have panned out towards 99,000, almost close to the test of the June lows at 98.3. Turned out that was not the case so far. It did print a low at 107,300 around late August, early September. From there, it formed right now a W-shaped double bottom. Well, the second bottom at 108.7 towards late September was at a higher low from the 107,000, but this is forming instead of an M-shaped double top, it's converted to a W-shaped double bottom. So the second bottom, 108 at about the same level of RSI, slightly higher MACD, which is positive divergence. From there, we can see the climb higher. If you draw a trend line joining the highs, 123,000, 124,000. It measured somewhere near the 127, but if you really measure the W shape from 107 to 118, that's 10,700. Added to 118, that's 128,700. So we think this rising trend line joining the peaks kind of gets to 127, 128 is where Bitcoin tests. Then maybe we get a pullback. So in some ways, this could turn out to be an inverse head and shoulder pattern. So this is the left shoulder from 123 to 111.9 up to 124.5. Then a double a W-shaped head is forming. This is the head of an inverse head and shoulder. Go back to test a higher high at 127, 128, and then pull back to form the right shoulder, and then the break higher. So that breakout from 107 to 128, you're talking about 20,000, 21,000 points added to 128 is 149, 150. So that's one target. Potentially, if it does break out, crosses 130, could head towards 150. However, the bullish flag pole with the flag forming measures almost above 170,000. So there's a potential possibility that we could see Bitcoin cross 150 and climb towards the 170. We can see that RSI is already getting close to print a higher high from what it printed at 124. MACD is also climbing. It's above the positive zero center line, climbing higher highs from the previous MACD that we saw here in the 124,000 test. So those are all bullish signals, and potentially it might be actually the time to consider getting out of physical gold, and we're going to talk more about the cyclicality of gold and the massive climb it has had for the last 10 years, into the digital gold, which is Bitcoin. Seems to be the momentum is now going to take on. And seasonality, we know that every time Bitcoin halves, The last three times it happened in 2016, 2020, and then 2024. About 18 to 19 months later, we see a parabolic peak, and that parabolic climb is about to come in this month, typically October to November. So now Ethereum, if you look at its chart, in this case, you're looking at a 4-hour chart, has a cup and handle. So 42.31, pull back to 38.25 to 42.47. So the depth of the cup from 38.25 to 42.47 is 222 points. Add 222 to 42.47 takes us to 46. 69. So 46.69 is where we think Ethereum in near term, this is not a longer term chart, just a near term chart. It kind of keeps close to 46.19. This is 4 hours. So early this morning on Sunday, it had hit 46.19. Since then, it's pulled back slightly toward the 45.41. We can expect this to kind of maybe meet the target later today or tomorrow, 46.69. From there, we can see that previous test at 46.46, maybe a bit of a pullback. It could even go maybe climb to 47.67, and from there kind of form a pullback towards the 4,200 and then a break higher. But it's not just Bitcoin. You can expect the alt currencies, whether it's Ethereum, whether it's Solana, whether it's the other cryptos, to do also very well when Bitcoin climbs higher. So this could be the bullish season for people to kind of get ready to play the upside coming. Now, I do want to talk about moving out of physical gold. This is a very long-term chart. Every candle is a quarter. You can see it says quarterly. So there are 4 quarters in a year. So this is a quarterly chart, and a repeating phenomena is happening. A 10-year run from 1970 to 1980. You can see that vertical parabolic climb, and then the RSI got deeply overbought, and then we got a pullback. In a similar way, we can see that the next 10-year cycle for gold happened from 2015, 2001 to 2011. So we can see that this was a parabolic climb again. And then the most recent 10-year run started at 2015, is coming right into the 10-year cycle at 2025. So we can see that how far it has diverged from the longer term. This line in blue, this curve in blue, is the 50 period moving average. The period in this case is a quarter. Every candle here is a quarter, is a quarterly chart, as we see here. So that we can see that in the first run, like in the early 70s, 70 to 80, it had diverged about 300%, right? That was a big divergence. So it was almost 4x from where it had started in 1972, like it went up there. And here we are past 100% was what we saw in the 10-year run from 2001 to 2011, and we are at that same level. So we are literally 100% away from where the 50 period moving average is at 1722. Double of that 100% is 3400, 3440. We're at 3885. Now, psychologically, yes, there is a round number of 4,000, but last time, remember, it did not hit the round number of 2,000. It could have hit 2,000. It topped out at 1920. So there's nothing in certainty that it is going to go across 4,000, but for all possibility, fact that it has come this close, it has tested 3897 or 3900 recently. Jeffrey Gundlach, a very well-known economist, has been calling for a 4,000 in gold. Many in Wall Street central banks are all investing heavily in gold. So it's a possibility that it might just test that 4,000, but this kind of a parabolic vertical climb, we can see 3 cycles. So 10-year cycle 70 to 80, 1970 to 1980, and then a top out, and see how sharply it pulls back to test that rising blue 50 period moving average. Again, a pullback to test that rising. It does not have to pull back immediately in these quarterly, so it took a few years for it to pull back, but it did pull back. And so 1920, it pulled back all the way to 1100. So this pullback, imagine if it has to pull back, we're not saying it's going to go back to 1700, but at least a pullback to 3000 near term as the next few months is quite possible. So from 4,000 to 3,000, you're talking about 1,000 points, 25% pullback can't be ruled out. So that's why we are saying that when you have these very vertical parabolic climb, 10-year cycles repeating for the third time, I would be cautious, and time to diversify out of physical gold and look into the digital gold, which is the Bitcoin, And finally, we're going to end with S&P 500. The S&P 500 hourly chart we can see is showing negative divergence as it has been steadily climbing higher highs in price. Every higher high it prints, it shows a lower high in RSI. And same thing with the MACD is also printing lower highs. So the most recent high at 67.50, we can see that the RSI was weaker than the previous peak here in the September 22nd time frame, and then in the September 11th to the 12th time frame, we can see RSI was even higher. So that negative divergence in RSI as S&P prints higher high potentially points to a pullback. Now, the bigger picture, though, is if you look at the 61.47, which is the February high in S&P, pullback to 48.35, up towards the 60, let's see if you hover around it, it'll tell us where it went. It went up to 6,059, 6,060. From there, a shallow handle and that upside, that measures all the way to 72.83, close to 7,300. So yes, the melt up target on S&P is still higher. So that 67.50 may come back towards maybe the 6,500. We can see that 6,500 previously was key resistance, 64.81, 65.08. So we may just have a shallow pullback from here towards the 6,500, test this rising 50 period moving average, but so far it has been holding, hasn't broken down, and there maybe have a quick climb into the 72.83. So that's what we are watching. So 6,500 to 72.83 would still be 783 points or so from 6,500. So that would be easily 12% additional upside once we get a pullback. But seasonality, October tends to be a weak month. So there's a possibility we could see that pullback. So in summary, we started off talking about Bitcoin. That's the digital gold. We said that this on its daily chart has a flag pole, and then a flag pattern is forming with higher highs on the flag, 123, 124, and most recently tested 125,700. But we believe that if we call this as an M-shaped double top that the bears were looking for, that was measuring down to 99,000. It didn't quite pan that out. It had a low at 107.3. It went up to 118, tested a higher low at 108.7. From there, it has kind of started moving higher. The upper end of this rising trend line joining the peaks is closer to 127, but it could potentially, if you look at the W-shaped double bottom pattern, 107 to 118 is 10,700. Add that to 118, 128,700. So it could kind of test that trend line on the joining the peaks, pull back, have a right shoulder of an inverse head and shoulder. So this is the left shoulder. This is a W-shaped head, and then a right shoulder, and then a breakout. That breakout from 107 to 128, 128 is about 20,000, 21,000. Add that to 128 measures 149, 150. So that's potentially the target that Bitcoin could climb to once it breaks above 128 to 130,000. And then if this bullish flag pole, pattern pans out, the flag pole is 74 to 123. You're talking about almost 50,000 or 49,000 added to 123 is 172. So potentially further upside towards 170, 172 can't be ruled out. Ethereum, this is just a near-term chart, is pointing on the 4-hourly chart. Every candle here is 240 minutes or 4 hours. A cup and handle, so 42.31, 38.25 is the base of the cup. The right brim is 42.47. So the depth of the cup from the right brim to the base to the bottom is 422 points. 422 added to 40 to 47 is 4,669. So that's where we think near term it's climbing. You can see near term in the 4-hour chart, there is negative divergence, RSI printing. So we could see that, and then maybe from there a pullback. And then eventually we can see that the 50 period is beginning to climb higher, break above the 200, and then we get a bullish breakout. So if Bitcoin is breaking higher, there's a very good chance we will see all cryptos move higher as well. And seasonality wise, this is the 18 to 19 months after the halving event of Bitcoin. Bitcoin's last halving happened in April 2024, is setting up perfectly for it in this month of October, November, is seasonality wise, where it could have a parabolic climb towards its peak. So sharp, rapid peak move is coming, and Ethereum in this case will break higher and go a lot higher. We expect Ethereum to even touch as high as 9,000 if we take a longer term chart of Ethereum. Gold, the the bigger long-term picture, every candle here is quarterly. We can see going back to 1970, it had a 10-year run, a parabolic peak, and then a pullback, like a sharp correction. The next 10-year run came from 2001 to 2011, a climb up to 1920, and then a pullback over the next few years. And then the same kind of a parabolic climb is happening from 2015 to 2025, the 10-year run. So the 10-year run is repeating here thrice, very deeply overbought RSI at 87. We saw similar kinds of RSI in the previous runs. And we can see that percentage-wise from that 50 period moving average, the 50 quarterly moving average, it has diverged over 100%, like it had where it peaked in the previous 2011 peak. So that's something also to be concerned about, the fact that it has diverged this much away. So from laws of averages, it tends to pull back and at some point may start pulling back. I'm not saying it's going to immediately pull back to 1700 or 2000 for that matter. Eventually, at some point, yes, gold will get cut in half and pull back to 2000 over the next 4 to 5 years. But at least near term, we won't be surprised to see it pull back from 4000 to the level near 3000 from where it kind of broke out higher. So that's a 25% correction in gold in the next several months is very much a possibility. And finally, S&P hourly chart is printing negative divergence, potential for it to pull back, and the the daily chart as well shows a melt up high towards 70 to 83. So even if you do get a pullback, you can see this negative divergence on the daily chart, lower high in RSI as you have higher high in price. Could come back, test the 50 on the RSI, and this could test the 50 period moving average near 64.96 or 6500, which you see previously strong resistance will now become support and their climb back towards new higher highs at 70 to 83. With that, good luck investing. We'll talk to you next week. Thank you.